The property market's going to crash. Everyone's saying the same thing. The property market's going to crash. Oh my God, we've been through this before. It's a shock to the system. Whenever there's a shock to the system, from tax, from world events, war, whatever you want to have it be, it stalls confidence. We're in a confidence and sentiment issue right now. And that confidence issue is affecting people buying property. Second to that, there's a fundamental shift in affordability. Why? If you buy an investment property, you're not going to get that juicy tax return anymore unless you buy a new build. And without that juicy tax return, that tax refund, you can't afford the same property you could afford last time, right? So all that's happened is the tax reform affects affordability. How much will investors buy for? They're going to buy for less. So what does that do? It puts pressure on the more affordable markets. Guess which markets have performed the best for the last 20 years in Australia? It's the affordable markets. It's the sub 650 markets across the nation have been the ones that have doubled so fast. That's been the areas in WA, South Australia, Queensland that have doubled. They were the affordable markets. Those affordable markets are super affordable right now in Tasmania, in Darwin, and of course in the big one, Victoria. So all that's going to happen is investors will regroup, which I'm already seeing. They're buying in the affordable markets, which is really Tasmania and Victoria. A lot will focus on new builds, but not the majority. The majority will just buy affordable markets where they can afford the property. When if they don't get the big tax return, they can still afford to hold the property. That's normal. Owner-occupieds are unaffected, right? Owner-occupieds are unaffected. Owner-occupieds' existing portfolio, it's unaffected, okay? These markets are unaffected. It's only really the investors that are trying to stretch themselves, that relied on the tax return, that relied on that tax refund to afford the asset, that are impacted by this outcome. Yes, CGT and the taxation on trust, they're all factors that affect confidence and sentiment. And that's why you're going to see clearance rates and all these normal things occur. But it's not the end of property or end of investing. People will continue to invest and people will be back in droves as the dust settles. People get some understanding. They know what's going to happen. They know it's nowhere near as bad as they think. And where they're going to invest, like always, they're going to invest where there's opportunity for capital growth, opportunity for high income, and where they can afford to invest, which is going to be the affordable markets. Investor demand has just shifted down. Shift with it. Invest confidently and don't wait, because the markets, they're not going to tell you when they're going to be bottoming out and troughing. They're going to be troughing and bottoming out now. Invest now and enjoy the ride back up.